Welcome to The Economist in Your Ear podcast. Today we're asking a crucial question. When the world's largest offshore wind developer finds itself caught in a tempest, should we be reaching for the life raft, or is it just a bit of choppy water before clearer skies? We're diving into what's happening with Ørsted, the big Danish offshore wind company. It's a really fascinating situation, sitting right at the intersection of renewables, global finance, and some pretty volatile politics. Look at how different people are framing it, starting with The Economist's recent take. But then, importantly, we want to peel back some layers, see what maybe that view doesn't fully capture. The goal today is to cut through the noise, the corporate speak, the political spin, and give you a clearer picture of Ørsted's situation and, well, why it matters. All right, let's start with The Economist's view. What struck me was how, relatively calm they seemed. They basically said, look, there are some foul winds, sure, but no need for Ørsted's investors to panic. It felt like a narrative of, okay, temporary setbacks, but fundamentally strong. So what were they pointing to specifically?
Well, first, the immediate shocker. August 22nd, the U.S. Interior Department stops work on Ørsted's huge Revolution Wind project. That's 704 megawatts off Rhode Island, Connecticut. And it's, 80% complete? $4 billion project. And it's a joint venture, right? 50-50 with Skyborn, which is linked to GIP and BlackRock. So stopping that, that's a big deal.
A very big deal, especially that late in the game.
Exactly. Then The Economist ties this directly into politics. They mentioned Donald Trump's grudge against windmills, citing past actions and his recent One Big Beautiful Bill Act from July 2025.
Right, the one they say gutted those clean energy subsidies.
Yeah, subsidies from the previous administration.
Yeah.
They also bring up that earlier stop order on Equinor's Empire Wind, which was lifted later, maybe suggesting a precedent.
Perhaps, or maybe just highlighting the political risk.
And this isn't happening in isolation, financially speaking.
Oh.
Just before the stop work order, Ørsted announced this massive DKK $60 billion, about $9 billion equity raise, a rights issue.
To shore up the balance sheet, basically, citing material adverse developments in the U.S.
And then S&P Global steps in, downgrades their debt rating to BBB. That's just one step above junk status, so clear signs of financial pressure.
Definitely puts them in a tighter spot.
But despite all that, The Economist offers reassurance. They seem pretty confident that the rights issue will happen.
Well, they have strong backers, JP Morgan Chase, other big banks, and the Danish government itself owns a majority stake.
Right, the Danish state is a huge factor. They've said they'll participate. There's an EGM, an extraordinary general meeting, on September 5th for the prospectus details.
So the expectation is the money will come through one way or another.
And The Economist also argues Ørsted's overall finances are, not crisis territory yet. They cite a 7.5% return on capital employed in the first half of 2025.
ROCE, yeah, a key metric.
And if you strip out impairments and cancellation costs, it jumps to 12.3%. Plus, analysts expect around DKK 28 billion in operating profit, EBITDA, this year.
Which, The Economist argues, is enough to handle their DKK 66 billion net debt.
And importantly, it's not all about the U.S. They highlight the strong pipeline outside America, Britain, Germany, Poland, Taiwan.
That TSMC deal in Taiwan is a big one.
Huge, right? A 20-year agreement with the world's biggest chip maker for all the power from that 920 milliliter Greater Changhua wind farm. That's serious long-term revenue.
Definitely a positive counterpoint.
And finally, their strategy of farming down assets, selling stakes. They plan to raise $5.5 billion this year and next doing that, like the recent UK deal with Brookfield.
So bringing in cash by selling parts of completed projects, it's a standard model for developers.
So the bottom line from The Economist is, fairer winds await beyond America's shores. A U.S. storm, yes, but the global ship is sound. But is that the whole story? What else should you, the listener, be thinking about?
Yeah, and this is where stepping back and connecting the dots becomes really important. While The Economist's view is, comforting the underlying numbers and especially the policy shifts, they suggest maybe a more significant reevaluation is needed, particularly for the U.S. side of things. It's not just a temporary squall, I think. It feels more like a structural change in the weather pattern over there.
So that U.S. policy shock you mentioned, it's not just background noise.
Not at all. The BOEM stop work on Revolution Wind, coming after Trump's One Big Beautiful Bill, which, let's be clear, actively rewrote and cut those IRA-era tax credits, and then a White House order reinforcing the end of green subsidies. Look, this fundamentally changes the math for project finance and U.S. offshore wind. The economics just got a lot harder.
So you're saying it's not just a political headache, it actually changes the financial viability, the structure of these deals going forward.
Precisely. And that leads straight to the question of Ørsted's finances, especially that DKK 60 billion rights issue. The Economist says no need to panic, but think about it. You're trying to raise a huge amount of money after a major project halt in your key growth market, after a rating cut to near junk status. Your cost of capital is going up, almost by definition.
Right.
And your equity is already seen as dear, meaning the market's worried, the price is down. Raising equity then is expensive, it's dilutive for existing shareholders. It shrinks their piece of the pie.
So not necessarily an existential threat, but it forces tough choices, like maybe selling off more assets faster.
Exactly. It could force much sharper portfolio pruning. It really demands a complete re-underwrite, a reassessment of the whole U.S. business case.
Okay, but what about that diversification argument the economists leaned on? The strength in Taiwan, the UK, Europe, doesn't that offset the U.S. risk?
It helps. Absolutely. Diversification is good, but we now have to view U.S. offshore wind cash flows as much higher risk, much more volatile, what finance folks call higher beta, at least until the policy environment there stabilizes, if it does. The potential future value, the option value of those U.S. projects has taken a serious hit, and investors are going to demand a higher return for taking on that risk, meaning higher discount rates.
Which lowers the present value of those projects.
Correct, and you can't just average that out globally. The risk profile is fundamentally different now.
And you mentioned the JV structure for Revolution Wind, the 50/50 with Skyborn GIP BlackRock. You said that could be complicated.
Well, it can be a double-edged sword. Yes, a strong partner helps with finance, maybe legal fights. But if timelines slip, costs go up because of this pause, claims start flying. Managing a 50/50 venture in that scenario, that gets complex. Shared governance can become a real headache.
So pulling back again, if the U.S. political risk is now central to Ørsted's valuation, how should investors think about the global portfolio? Is it still a safety net?
That's the crucial point about connecting the bigger picture. While The Economist rightly highlights strong contracts like the TSMC PPA in Taiwan or UK projects with government-backed CFDs, those are fundamentally different beasts compared to U.S. political risk and tax credit uncertainty. You have to acknowledge what we call regional heterogeneity. The risks aren't the same everywhere. You can't just net out a stable PPA in Asia against a politically frozen project in the U.S.
The valuation needs to be more granular, region by region.
Absolutely. You need to segment the risks, not just look at a global average.
The market seems to be getting some of this. The share price is down, the rating cut happened. But are there things the market might still be missing or underappreciating?
Well, what's fascinating, and maybe underpriced, is the cost of this pause potentially dragging on. Shares are low, the rating is cut, the rights issue looks likely, but probably on tough terms, meaning more dilution. But the potential miss, it's the carry cost. Think about Revolution Wind sitting idle. Vessels, crews, contracts, they still cost money, even when nothing's happening offshore.
Like paying rent on an empty factory.
Exactly. We saw with the Empire Wind pause earlier, the record burn rate was significant. If this Revolution Wind halt lasts months, we could easily see Ørsted having to cut its financial guidance again, maybe sell off more assets than planned or sell them cheaper. That ongoing cost could be substantial.
Okay, so for you, the listener, wanting to track this, what are the key things to watch over the next, say, 2 to 6 weeks? How do these different takes play out? First, the legal posture. Any court challenges from states like Rhode Island or Connecticut or Ørsted itself trying to force a restart. And any more detail from BOEM on why exactly they cited national security, that's critical.
Yeah, the justification there is still pretty opaque.
Second, the rights issue details. When that prospectus comes out after the September 5th meeting, look closely at the terms. The discount offered to existing shareholders will tell you a lot about how the market is really pricing this updated U.S. risk.
The banks are there, but the price tells the story.
Third, other rating agencies. S&P acted. Will Moody's or Fitch follow with downgrades? And crucially, does any of this trigger loan covenant issues? That could create new financial headaches.
Covenant breaches are always a worry in these situations.
Or fourth, watch the partners and customers. What do the utilities in Rhode Island and Connecticut do? What about Skyborn BlackRock? Any moves to renegotiate timelines or payments because of the pause?
Their reactions could really impact the project economics going forward.
And finally, keep an eye on non-U.S. delivery. Are they hitting those TSMC milestones in Taiwan? Are European projects coming online as planned? Success outside the U.S. is vital now to counterbalance the American uncertainty and support that overall profit picture.
Absolutely critical. Execution outside the U.S. has to be flawless now. So, look, The Economist is right. This isn't necessarily Ørsted facing imminent collapse. It's not a panic case in that sense. But I do think their piece underweights the capital structure risk. U.S. subsidies have been cut by law. A nearly finished multi-billion-dollar U.S. asset is frozen. And the company is going to the market for cash with near junk ratings and a low share price. That's a significant shift. It's not business as usual. It forces a fundamental rethink, a re-underwriting of their risk, especially in the U.S.
Yeah, it feels like the plausible path forward, the bull case, really hinges on nailing everything outside the U.S., pulling off those asset sales smoothly, and getting that rights issue done effectively to rebuild their financial cushion.
That's the tightrope they're walking.
While the bear case is clear, a long U.S. delay, those carrying costs mounting up, maybe asset sales don't bring in as much cash, and potentially more ratings pressure. The reality probably is somewhere in between. But understanding both sides of that coin is really key to following this story. Definitely something to keep thinking about as we see how this plays out. Thanks for listening. Follow us to stay updated with the latest insights on The Economist every day, and don't forget to like, comment, and share.